And as global investors keep their eye on the economic health of emerging markets, businesses are also looking for danger signs and opportunities. Dominic Barton is the managing director at McKinsey Company. That's the global management consultancy firm. And Shraysi Tandon caught up with him at the World Economic Forum in Davos, Switzerland, and asked him about the biggest challenges facing emerging economies in 2014.
I think there's a couple of big ones. One is the tapering effect. I mean, what's that going to do to the capital outflows? And I think we're seeing some of that, the challenges in India, Indonesia, to some extent Turkey. So making sure that there's stabilization is going to be an important part of what happens. But I think the second one is actually governance and reform, because the potential is huge. The bottleneck is governance and being able to build the infrastructure to get the projects done, because it remains, I think, some of the most attractive investment opportunities in the world. But often what dampens it is the governance, the government policies, the time it takes to get transactions done, going through regulation. So those to me are the two big issues.
What would you say is the biggest benefit of businesses setting up in developing economies versus developed ones? What is that emerging economies, what's the advantage that they have?
Well, I think there's a couple of big issues there, opportunities. One is clearly the market is moving that way, right? We have a power shift that's going on in the world. 2.2 billion middle-class consumers are going to emerge in the next 15 years. And that's all going to be in the emerging markets. Asia, Africa, to some extent South America, but particularly Asia. So if you want to be relevant in the world, you have to be operating there, selling products, services, being relevant in those markets, or you will be irrelevant. And there's a very large group of emerging market companies that are forming. Half of the billion-dollar-plus companies in the world will be coming from the emerging markets over the next 15 years. So that's one. You have to be there to be relevant for the market. But the second is actually a lot of innovation is occurring in the emerging markets, because first of all, you're starting with a clean sheet. You don't have incumbency issues. We always did it this way, or the law rules said it's this way. It's new. So let me give you one example: healthcare innovation. You are able to use very innovative ways with technology to provide basic health services to large populations, which you would find very difficult to do in Boston, or in New York, or in Toronto, or in Europe. So I think the innovation, both in terms of the challenging orthodoxies of how you deliver, using, for example, technology, the cost levels, is going to be very different, and that's going to be in every industry. E-commerce is an area. If you look at what China's got the largest e-commerce market in the world. So we always talk about the Silicon Valley. That's an important area. Actually, Shenzhen is a really important area. If I'm interested in big data, I'd be spending time in Shenzhen globally.